one of the most important things to do is not to play when you don't see a fat pitch. I don't see a fat pitch in fixed income. It's extremely complicated because I'm in the hard landing camp probably sometime later this year. But again, this is so complicated, I'm not willing to place a big bet. And even if I believe in a hard landing, which I do, what do you do with 2-year treasuries at a sub 4% with Fed funds at 5.25? I better be right on my hard landing if I want to own fixed income. And then in the longer end, historically, this is easy. If I believe we're hard landing, I'm supposed to own bonds. But they're not exactly a screaming bargain. 10 years at 3.5 in the U.S., particularly with a Fed that has certainly shown some mettle in the last year, but historically, I wouldn't say Jerome Powell is a profile in courage. So if we get into a hard landing and he moves aggressively, I could see bonds and inflation coming back with a vigor from what I expect to be a lower level than right now. I will say that the response to Silicon Valley unnerved me a little because in 4 days, they printed enough money that basically wiped out the entire reduction of the balance sheet they had done for 5 or 6 months. So if I'm trying to look ahead and anticipate, I don't have a lot of faith in these guys, should we get into a hard landing, that they're going to hold the line and not do something maybe worse than Arthur Burns.
And where does it leave equities?
I think equities are really complicated. I think within the equity market, if you put a gun to my head, I'd be short the economy to the extent I should something pure like Russell 2000. Obviously, I don't want to go into individual short names, but names like that old economy, economically sensitive stuff. But let's just say we're going to have a hard landing and a bad recession in the U.S. What does that mean for NVIDIA? I don't know. I mean, oils and chemicals went up in 73 and 74. Staples have gone up in bad recessions in the U.S. historically. What do I do with a company, if you have a bad recession in the U.S., but it's growing wildly throughout that period because we have an arms race going on in its space? It's not clear to me it goes down. So I think the equities are complicated. I mean, I'd say the one area that I feel reasonably comfortable in is I'm short the United States dollar. Currency trends tend to run at least 2 or 3 years. We had a long one here, over 10 trillion, something like 13 trillion came into the US dollar during the previous decade. I will say, full disclosure, I missed the dollar, probably the biggest miss in my career in currency trades. I missed the last 9 months run up in the dollar. I just couldn't bring myself to own Joe Biden and Jerome Powell. But I think now that on a relative basis, the tightening in the U.S. going forward will not be as much as the foreigners now that we've weaponized the dollar, and you've got people like Lula running around asking why we need to be trading in U.S. dollars. By the way, it's not a bad question. Historically, we could be trusted. We had a rule of law, a lot of things. So about the only space I have any risk on right now is in the U.S. dollar. Don't run out in short dollars. I could change my mind in a week. But that's where I am right now, and I'm also long gold, obviously, for the same reasons.